Hey guys, Mark French here with Agape Property Group. Today is Friday, the 17th of December 2021. Today I'm going to be talking through Tom Ferry, Week in Housing. He puts it out every 2 to 3 weeks and they get together and they talk about the real estate market and the trends and the forecasts for North America. So there's slides that I'm going to talk through during this, and I'm going to get right into it. Let's do this. I'm going to share my screen here. Let's see, share my screen. Bada bing, bada boom. All right. Okay. So I'm going to read verbatim some of these slides. So the M report, let's just kick this off with kind of like market activity. So the demand for their housing in the United States has reached a fever pitch, a trend that opposes the norm of this time of the year when the market cools off at winter as winter months set in. So this is some showing time data. So showing time is a platform where agents record the activity of showing their clients their homes. And so showing time collect the data and they report it out. And so what's kind of relevant here is that typically October you would see a continuing downtrend, but actually we've seen an uptrend in the activity. So that's a sign that there are buyers and the activity is higher than normal. And then so this slide is comparing the last 5 Octobers. And you can see even 2021 is slightly up on 2020. And then, of course, we're up on 19, 18, and 17. That's pretty much it. I don't think there's any major surprises there. I am going to pause on this one here for a second. This is a really good slide. So this is the average equity gain over the past 12 months. So the darker colors are the states that have seen the most amount of equity. And the lighter color states are those that have had the least amount of equity gain this year so far. So the national average is 56,700. California is the highest at $119,000. And we have Arizona at 92,000 average equity. Idaho is 82,000, but I'm interested to know what Boise is because I know it's had a soaring year. And Texas, where I'm in, Austin has been percentile has been about 40% appreciation gain, but I am interested to know what Austin's average equity gain would be. I'll see if I can get that data actually and put it out to onto my next Austin market update video. But this means there's a lot of buyers motivated by this. They want to use the equity and invest in real estate, or they want to do something else. And so it comes back to, if you don't love your home, rent it out, put down 3% on a new home. Now you're an investor and rents are only going up. So it suddenly gives people those options and freedom to start thinking about, well, maybe I can be an investor now. So leaving it there, I'm going to move on to put on screen we're moving on to like forbearance and foreclosures. This is an example of a headline that came out on December the 2nd. Thousands could soon lose or sell their homes as COVID bailouts expire. Well, the truth is, guys, we are below 1 million now on forbearances. The forbearance programs are working. People are working with the banks to get into a payment plan, or they sell their home and put it on the market. They get top dollar for it. It might not be top dollar for it. It might be a sell as is situation, but they still typically would be walking away breaking even, or even having some money in their pocket. So, with the market conditions that we're in, I think it's supporting this as well. But also, forbearance programs back in 2008, 9, and 10, they weren't as effective. You went into forbearance, and then you're essentially going to be, foreclosed upon. But that narrative is no longer correct. So here, the fact that foreclosure starts declined. Despite hundreds of thousands of borrowers exiting the CARES Act mortgage forbearance program over the last few months, is very encouraging. It suggests that the forbearance equals foreclosure narrative was incorrect. So let's move on. I'm going to move on into 2022. What can we expect to see? So price forecasts. If you look at the average across all of these kind of data sets, so Fannie Mae, Freddie Mac, CoreLogic, MBA, HPES, Zelman, and NAR, is 5.2% is the average. I would kind of hone in here more on Fannie Mae and Freddie Mac, since they are the guys where all of the lenders, want to be selling their mortgages to. They want to make sure that they're conforming to their standards and stuff. So they're directly kind of involved. It's what they do every day. So 7.4 to 7 is an indication of what prices can be doing nationally as an average. And then that's going to lead me on to the mortgage rates. So, the Fed, a couple of days ago, as of this video is being recorded, they mentioned about raising the rates 3 times in 2022. They mentioned also their QE tapering schedule they're going to double up what they're already planned on doing. I think it's now going to be pulling back by about $30 billion each month, and look at kind of completing their schedule by March timeframe. And they might even start to increase the rates before they complete that schedule. In any case, we're looking at anywhere between 3.5 and 4, for the mortgage lending rate towards the end of the year. I mean, these are projections, these are forecasts. Let's see how this pans out. I'm certainly keeping a good eye on it and watching the Fed's movements very, very closely, since it directs, the real estate market, the whole economy, the stock market. So that's that. So reading Danielle Hale, chief economist of Realtor.com, whether the pandemic delayed plans or created new opportunities to make a move, Americans are poised for a whirlwind year of home buying in 2022, with more sellers expected to enter the market as buyer competition remains fierce. This is, I think, the key sentence here. We anticipate strong home sales at a more sustainable pace than in 2021. So, price forecasts, we're looking at, it's not going to be as aggressive as 2021. We're looking at maybe a 5.2 average, maybe kind of like closer to the 7th percentile, which is what Fannie Mae and Freddie Mac are reporting. And as we kind of wrap this up, guys, let me just stop sharing here. Anyway, I'm going to leave it there, guys. I appreciate anybody who's watching this. If you've got any questions, hit me up. My details are not there, but I will post my details when I put this out to the platforms and email and so on. I hope it's valuable to you. This is me giving information out to people to be best informed when making decisions. That's what we're all about. Until next time, guys, happy holidays. Have a fantastic Christmas season. And until next time, adios.